Hey YouTube family, welcome to another video of the Kevin Strong Show. And in this video, we're going to talk about a company called Black Knight. Medium home prices declined in July for the first time in 32 months. Black Knight is a very well-respected, I will just call it like a think tank when it comes to statistics and following trends as it applies to the housing market. No relation to yours truly. But no, all jokes aside, great article, great information. It talks about some major cities that are experiencing some rapid decline in medium home prices. Seattle, Washington, once again, has made a very ominous housing list in terms of one of the top 10 cities that this article talks about. So we're going to talk a little bit about that and the housing market. I hope you enjoy this content. If you're enjoying this type of content, please do me the honor of smashing that like button, commenting and share, because you know I care. So without further ado, we're going to get ready to jump into this video. You guys know what my position is. I present a macro view when it comes to the outlook on the housing market. I think we're going to be in for some stormy weather, so to speak, nationally. That's more of a macro view. There's always some exceptions. So if you're in a market where you're experiencing home price appreciation, or your home market or your housing market is stabilized, good for you. But that's so far. What do I anticipate as things go on? I think things are going to get a lot worse. Everybody knows that the Fed's going to probably continue to increase interest rates over the next 2 to 3 months. I think we're going to get 3 rate increases this year. By the end of the year, looks like we might see a 30-year fixed rate at anywhere from 7.5% to 8%. That's very, very doable. So in markets like Seattle, where the median home price is almost $800,000, less than a year ago, you can get a rate of around 3%. Those rates are long gone. So it's almost impossible to have a vibrant housing market in a high price housing market when interest rates have gone up so much and so quickly. So without further ado, let's go ahead and get into the news. So as I said, the title of the video matches this article. Black Knight, medium home prices declined in July. First time in 32 in balance, fairness, and kind. So let's go ahead and review the caveats to this article. Important caveats: in normal times, medium home prices flatten or decline seasonally in the second half of the year. So a decline in July isn't unusual. I think it's unusual because we've been on such a torrid pace within the last 24 to 30 months. So historically speaking, the caveat is applicable, but in recent history, I don't think so. I think this could be an inflection point of a very ominous trend to the downside. So Andy Walden at Black Knight, something had to give. Home prices down for the first time in 32 months here. And annual home price percent. So it sounds good on the surface, right? And there's a lot of people who have that narrative that's been stating the year-over-year increase in home price growth, more than 3 times the long run average. But most of that appreciation occurred in the last months of 2021 and earlier this year. Okay, housing traditionally, folks, is a lagging indicator. That's why, to me, it's more important to see month-over-month trends opposed to looking back in the rearview mirror to support a narrative that could no longer be in play. Such strong annual growth rates can hide underlying weaknesses. Month-over-month data gives you here we go. This is what I've been saying on Facebook and everywhere. Month-over-month data gives us a much clearer picture of just how much and how quickly the housing market has shifted. So, guys, this is what I've been talking about. You've got these pundits out there and some experts that's trying to sell you some snake oil, talking about this year-over-year number. I just don't buy it. I think, as this article eloquently stated, that month-over-month data is a much more accurate picture as to where housing is trending, opposed to looking historically year over year, because so many things have changed. Inflation and all the things that are going on now have exacerbated way larger, on a way bigger scale than what we experienced in 2021. There's so many other factors that are going on. People are talking about what interest rates were decades ago. I think this is a new economy. I think we're globally connected, and there's so many things that are going on that we haven't seen in a long time. So people talking about interest rates in the 90s and what it was back in the day. Hell, if we're at a 40-year high for inflation, I was in high school, okay, 40 years ago. So it's uncharted territory, and I think those people who are relying on historical data to kind of think that the next downturn in housing is going to be somewhat soft on a national level, I think is having a myopic viewpoint. But let's go ahead and jump back into the article. I just wanted to share that, guys, with you. The median home price fell by 0.77% in July, the largest single month drop since January of 2011. And in 2011, we were still dealing with the great financial crisis. That was still going on. The housing market nationally didn't really kind of turn up until around 2012, specifically on the West Coast, and more specifically in the Seattle, Washington area. And if I want to drill that down even more, King and Pierce County, respectfully. Okay, so here's a chart right here that kind of shows you what I've been talking about. A big jump down in the negative to what for the month of July. Okay, seasonally speaking, July should be a hot month for housing activity. As the article indicated, from a caveat perspective, yes, there has been some time in the past where housing activity has been soft in July, but in recent history, that has not been the case, and it definitely hasn't been the case the last 2 years. That's why I think, in my humble opinion, this particular stat is a canary in the coal mine, so to speak. And as you go out here in August, September, it's kind of flatlining, but clearly you can see it's off its highs from earlier in the year. This is Black Knight Home Price Index, so month home price index, and then it has the annual home price growth rate. Okay, and the annual home price growth rate is that lime green line, so to speak. That's a tongue twister. And as you can see here, this is what they call, and when you're looking at technical analysis, when you're looking at stocks, folks, they call this a double top here. You see this because right here, this has kind of been flatlining month home price changes, right? Kind of chugging along, kind of went down a little bit 2019. Obviously, we had an issue in 2020 because of the healthcare crisis, and then it skyrocketed up. See that? Boom. We haven't seen this type of takeoff. This goes back to 1999. You see this here? And obviously, when we had this period here, that was during the great financial crisis. And I said, remember earlier around 2012, see that? Boy, I'm good. That's when things started to level and started to surface and gain some momentum. So as you see this double top here in 21 and 22, it's going to roll over. And in my humble opinion, it could reset down here. And that's where a normal level is, which could potentially be 2016, 2017 price levels. That's just a soft prediction. I'm going to go down here and we're going to talk a little bit more. Okay, let's look right here. All in, more than 85% of major markets have seen prices come off their peaks through July, with a third dropping more than 1% and more than 1 in 10 falling by 4% or more. Once again, I cannot beat this point enough. Month over month housing data is much more accurate and gives you a clearer picture as to where housing is trending, opposed to looking at year over year type of data. So let's get down to some of these cities that are possibly on the chopping block in terms of losing significant home price and or value over time. San Jose, California experienced the most significant pullback, with the average home price down 10% in recent months. See that? They didn't say year over year, right? In recent months, followed by Yours truly, Seattle, 7.7%, San Francisco, 7.4, San Diego, 5.6, Los Angeles, 4.3, and Denver, Colorado. Yep, it's coming to a town near you, homie. You know what I'm talking about. So Denver's down 4.2%. So these are the ones that have made the naughty list, so to speak. Seattle coming in number 2. Seattle, Tacoma, Spokane, Washington. These are major cities in the state of Washington that have made some very, very naughty lists. So I think this region of the country will probably experience the most pullback when the housing market truly gets an overdrive in terms of turning negative. So just a really hot mess. Let's go down here and look at this chart. This kind of gives you kind of a chart look at some of the stuff that I just read. Like I said, showing Seattle minus 7.7%. You guys have noticed that mortgage rates have gone up quite a bit. They've gone up a lot, okay? And even if you're at around like a 700 to 720 FICO score, you're looking at about 6.8%. I said earlier in the video, I think the Fed's going to raise rates 3 times this year. So by the end of 2022, you can easily see a 30-year fixed rate from on the low end, I'm going to say 7.25 to 7.5. On the high end, it could reach 8%. So when you look at interest rates like that, and then you apply that type of financial situation to a very expensive housing market like King County, which is where Seattle's located, where the average home price is around $800,000, and you could have got that type of home a year ago at an interest rate half or where it's probably going to end up in 2022. That's going to dry up all the housing activity in those type of markets. And that's why some of those high cost markets that we've just looked at, like San Jose, San Francisco, Denver, Seattle, Washington, are going to probably experience a significant pullback. Please be careful. Can you make money in this market? Absolutely, but it's not for the faint of heart. There's probably more risk than reward. If you're new to investing, please don't take a bunch of courses and then jump into a market that historically we may look back and find out this was probably one of the biggest housing crises in history, potentially in some markets, not all, but some. So I think you might be better served in moving slow, exercising some prudence, and taking your time. You don't want to jump into something, especially how just messy and unpredictable the economy and the housing market is in today's environment, right? You don't take a couple boxing lessons and watch a couple tapes, run a couple miles and say, hey, I think I'm ready for a tune-up fight. Well, we're going to put you in there with Mike Tyson. You know, see how that works out for you. So don't get sucked in, because maybe an experienced, well-versed real estate investor can monetize and can potentially make great money even right now. But for a newbie just getting started, please exercise due caution, do your due diligence, and be careful, because I think bigger and better discounts are coming in 2023. You know my motto: keep your credit score up and keep your debt down. If you enjoyed this video, please smash the like button. Please comment and share, because I care. This was the Kevin Strong Show, and I'll see you guys in the next video.